Hey guys, good afternoon. This is Angelo Christian Financial. Thank you so much for watching our podcast, Real Estate Insider, where America goes for funding for the last 20 years. We're the nation's premier lender, and we produce a ton of great content on our show. Not only are we just a YouTube channel, but we're also an actual lender. We are a direct lender for the last 20 years. We do commercial, residential. You can call or text, work with us directly at 832-431-6331. This video is brought to you by Ishmael Ortiz. He was on our Instagram and YouTube live last Thursday, and he asked the question, hey Angelo, if I make $85,000 a year of income, how much of a house can I qualify for? I thought, hey, that's a great idea to make a video about that. If you make $85,000 a year, how much home can you get? How much can you get approved for to buy a house? So I thought it was a great idea to actually make a video about that, because it's kind of reverse engineered. Hey, if I make this much income, how much can I qualify for to be able to buy a home? So anyway, great question. I'm going to talk about it, break down the math, how we can actually determine what you qualify for and how much you get approved for if you make $85,000 a year. Now, I'm going to do a very general breakdown and an analysis, because it depends. A lot of it depends on the state that you're in. $85,000 goes differently in Texas than it does in Florida and California. So I'm just going to do a national general average. And so the first thing we're going to talk about is we're going to just break down the math. $85,000 comes out to about $7,100 a month income. So we're going to divide everything by 12 that we do, the house payments, the annual income. So we're going to divide that $85,000 by 12 and come up with $7,100 a month. So you have $7,100 a month of income. Now, what they're going to be looking at to determine how much you can qualify for in terms of a home, a purchase price, is your housing ratio. I'm not talking about your back-end debt ratio with all your debts. I'm talking about your housing debt ratio. So generally speaking, if we're talking about conventional loans, they don't want your front-end housing ratio to be over 35% of your income. So if you take $7,100 times 35%, that's going to be about $2,500 a month. And for FHA loans, you can go up to as high as 45%. So that's going to be a payment of about $3,300 a month. So if I know that on a conventional loan, my payment can't exceed $2,500, on FHA, my payment can't exceed $3,300, and how I did that is take the $7,100 times the 35% times the 45%. Then I have to kind of calculate backwards. Well, how much is a house for $2,500 a month? How much is the taxes? How much is the insurance? What's the interest rate? And how much is the house for a $400,000 house? How much are the taxes? How much are the insurance? So you can use the calculator that's in the YouTube description, the Angelo Christian mortgage calculator that shall be provided. So you can type in your taxes, your insurance. Generally, in the United States, the national average for property taxes is 1.5%. So you can type that in 1.5% times the purchase price, and then divide that by 12. Use the national average interest rate right now, which is 3.5%. And then for homeowners insurance, you can use 0.5% times the home value and divide that by 12. And so what you come out with for conventional loans is about a $350,000 home. And for FHA loans, you come out to about a $450,000 home. Generally speaking, for FHA, you can qualify for about 15% more than a conventional loan. So if you qualify for $350,000 on conventional, for FHA, you can qualify for about $450,000 with the $85,000 a year income. Now, it depends, obviously, in the state that you're in. Obviously, the other debt that you have, your obligations, whether you have student loans, car payments, other mortgages, alimony, child support, all this stuff goes into it, okay? So I'm not saying that everybody that makes $85,000 can get this size of a home. There's a ton of other stuff that goes into it, but generally speaking, somewhere around these factors is what you can qualify for with a home loan, okay? In the YouTube description, there's a calculator. You can use that calculator. Remember, it's state specific for the property taxes. So it's like in Texas, some of the property taxes are 2.5%. In California, they're usually 1 to 1.25. Florida, 1 to 1.5. So use the state specific property taxes for your area. Homeowners insurance around 0.5%. Multiply that times the home value. Divide that by 12. Plug that into the calculator. Use an interest rate of 3.5%. You might be getting lower, you might be getting higher, but just use somewhere around there just to kind of help you. And then divide your income by 12. Plug all that information. Remember, for conventional 35%, multiply by your gross earnings. 45% for FHA, and that will determine how much you can qualify for the loan, okay? So I hope that helps answer your question. It was a great question, Ishmael. Appreciate you being a follower, subscriber of Angelo Christian. Remember, if you have any comments or suggestions on videos that you want us to make, please message us down below in the comment section. Share this with any friends or family you know that's looking to get approved to buy a home. Remember, we're here for you. It's where America goes for funding. Give us a big thumbs up on the YouTube. And we're here for you. Call or text us at the number above, 832-431-633, and we're here to help and serve. And yeah, dude, we're here to help you. So reach out to us. Appreciate you watching Angelo Christian. Thank you so much. And check out my next video. And thank you so much. Take care.